Talk about commodities now, and let's bring in Manisha with what's top of mind for her. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices, which are trading at a 3-week highs right now. If you look at the prices within this year, we've gained up by nearly 6% already. And there has been a lot of geopolitical premium that we've seen building up in case of prices here. In the latest report that the street is watching out for, well, there is Israel raiding Gaza Strip. The second hospital is out of service now. There also is Houthi fighters claiming responsibility for an oil tanker which was headed in for India. Over the weekend, we already have seen reports of 4 vessels hit by drones or missiles within the Red Sea itself. And this is what has added premium to prices. Apart from that, the street is also looking at strong travel numbers that have come in out of China in the previous week. Remember, it was the Golden Week holiday for China, and those travel and aviation and on-road numbers, all of them have been on the positive side. But that's exactly where the positive news kind of ends. And these are the factors keeping the prices in check. There is a report from IEA suggesting that the global supply will hit a record 103.8 million barrels per day in 2024, and much of this extra supply growth will come in from the non-OPEC countries. Within OPEC as well, when you look at the spare capacity, which is at an 8-year highs of 6.4 million barrels per day. So if and when that demand comes back, you already have higher inventories, higher production. US production is at an all-time high, and the OPEC spare capacity at an 8-year highs as well. So there is a very little chance that you could be looking at 90, 95 or prices beyond that in the near term at least. An ANZ report that came in last evening suggests that global crude surplus is what they are looking at in 2024. And then apart from that, we already are dealing with those slowdown reports that have been coming in from Japan and Britain. So the demand, in addition to China, within these economies as well seem to be slowing down. Another interesting report that I want to put on screen is from Morningstar, which says that the global demand will drop to 88 million barrels per day by 2050 from 99 million barrels in 2019. While there are various reports coming in, but just imagine that from 20 years down the line from here as well, it's not that the global demand for crude is going off too much. It still is expected to stay around that 88 to 90 million barrel per day, and that is in 2050. And that's something in sense of long terms. If there are no investments that are coming in, the street does believe that $80 or about is where you could be looking at the crude oil prices sustaining for a slightly longer term as well. And this is even taking in account that by 2050, 57% of all vehicles would be EV there. So the markets do believe that it is going to be for this quarter around 80 that you could be looking at the crude oil prices sustaining within. And for this year, the range clearly is between 78 to 88 as of now.
Right, Manisha, thanks very much. Interesting numbers, interesting stats there. Thanks very much. Well, the Nifty, by the way, is